Hello, welcome to Equity Access. This is Ibn Mabunda. Let's talk. Today we discuss issues that pertain to the Zimbabwean economy, recent developments as well as forthcoming. This is against a background of a looming presentation of the budget for Zimbabwe by the Honorable Minister of Finance, Professor Mutuli Ncube. But before we can delve into that, we're going to talk about events in the business community, and to discuss that I'm joined by our very own investment analyst, Mr. Anisu Chimbumu, as well as our chief analyst, Mr. Respect Gwenzi. Gentlemen, welcome to the platform.
Thank you so much.
Beautiful. Gentlemen, what's been happening on the stock market? What has been the trend? Anisu.
The stock market opened on a positive on Monday, and yesterday it dropped by about 8%.
Okay.
Consequent to Econet unbundling. So Econet actually dropped about 35% in price value. So to note on that, you would find that on Monday, that was the last day of Econet trading with Cassava within its group. So the unbundling then took place, and since Cassava contributed about 40% towards its revenues, it took away that value from the price.
Okay.
And dropped about 35% down to about 160.
Okay, but
Yes.
with the drop, I'm also aware that following that, it went up 4.1%.
Yes.
Respect?
Yeah, I think this is the market trying to establish a fair value for the retained Econet operations.
Okay.
But I think to give more perspective on the stock market, we find that the stock market is up by over 50% year to date. The reason being people are trying to hedge their monies from money market,
Okay.
due to inflationary pressures and also worsening exchange rates. So we're finding the stock market being a common hub for such funds, but people are simply trying to protect their monies. So the stock market has generally been up. It is actually the fastest growing so far in 2018 across Africa.
Okay.
But over the last 2 weeks, it has also been going up, pushed further by the October inflation, by the October inflation numbers, which showed a growth of 20.85 in inflation, coming from about 5.3. So we saw people further panicking and further pushing their flows into stocks against liquid RTGS balances. But coming into this week, like what Anesu has said, we've seen trades being affected, the trend being affected a bit by Econet. Econet is unbundling its operations, its tech operations, which is Cassava. And so on Monday, the market started off on a high before coming off by 8% on Tuesday, largely being driven by Econet's 35% drop. So Econet is the largest counter, and the debt which investors could declare or could assume their dividend. If you were on the books by the 21st, which is the day before yesterday.
Okay.
Yeah, if you were on the books by that day, it means you are entitled to get a dividend.
Okay.
So beyond that date, if you buy the shares after that date, it means you are no longer entitled to the dividend. Now also looking at that issue where you know that these other operations are going to be unbundled, investors had to wait for that last date of them getting a dividend from the company, as well as also getting value from the separation of entities. So basically that has been the stock market performance, and today's recovery really is almost trying to find a balance.
Okay. With the presentation of the budget looming, do you think perhaps there's been a bit of hesitation on the part of investors that perhaps could see a different trend in the days to follow?
What I'll talk about concerning the budget would give investors a foresight about the appetite that the government has towards the market. So we could delve into the budget a little bit more deeper.
From my perspective, I think the budget is likely to have an impact in terms of how investors react. If you're going to find a tighter budget where recurrent expenditure is capped and government try to consolidate its fiscus, I think investors might settle down a bit and reconsider. But then fundamentally, our crisis, what's driving people to the stock market, is the disparities in exchange rate as well as the growth in inflation. So these are not likely to change in the very short term. But if investors can see that there is a future in Zimbabwe, there is a future for growth in money, for growth in investment and whatnot, we are likely to see investors settling down a bit, chilling down a bit, and the market can be discounted at that point. But I don't see that being a very fundamental, causing a real shift in the stock market trends. We are likely to see a sustained growth in prices, but maybe at a stable rate if we find some good gestures from the minister.
Okay, we will talk about the presentation of the budget in the next segment. But for now, let me take you back to Kafka. I know that Kafka, a company listed on the Zimbabwe Stock Exchange, the Johannesburg Stock Exchange, as well as the London Stock Exchange, recently published their financial results for the year ending 2018. Yes. And I'm aware that they recorded some success in that regard. Would you want to shed more light, Anesu?
Kafka managed to rise their top line by about 57%.
Okay.
But then one thing that was of note to me was that their balance sheet grew by about 22%, consequent to about 400% in increase in their cash balance. Why? Because there were some TBs that they managed to settle, and then also in their current liability section, you would find that they have about 3.5 million lying in waiting for a dividend payout to their shareholders respectively, and that payout is probably sitting there because of the forex shortage that is there. So that growth within the balance sheet is nothing to really write home about because of mainly that 3.5 million that's sitting there.
All right, I realize. Do you think the protectionist policies implemented by the government could have weighed positively on Kafka's outlook?
I think so far it has worked. There are few players in the cable space outside of Kafka. It is the biggest player in Zimbabwe. But if we are to speak more on the performance side, what drove Kafka's top line performance, which we said was 56%, was mainly a shift in the sales mix from aluminium, which is more of a low value product, to copper. So they've been selling more of copper, which gives them higher margins. So it really pushed their top line growth.
Just to add on to Kafka, we noticed that since they changed their sales mix to copper, you'll find that the global prices for copper have been generally on a downward slope. And that is going to be a very big plus on them, because that means their cost of sales is going to go down and their top line is going to expand, and that means more dividends going to come in. So if it were me, if I had money in my pocket right now, I'll go and put my money on Kafka, because that's going to be a very good stock in the following years.
But what do you think of the fact that government is the largest buyer, it's the largest buyer of the cable? Is it not going to affect the quality of their sales, given that government, of course, we know that they do pay in treasury bills, which have become quite a problem? Will it not lead to constant discounts in the treasury bills?
There is, but then it's trying to put some hope and a little bit of faith in there would help us. But then if things are not to change, it's going to be a very big topical issue, because TBs are not going to be very much of a help to them. Because if you check with the TBs that they dispose, they only manage to get about 210,000
Okay.
out of that. So not knowing how big their TB balance is, 210,000 does not seem very satisfactory for me. But then but then also adding to government being a large buyer for them, there also has been an issue about them trying to expand their housing project. So that means more demand for them.
Okay.
If things are positive on the treasury bill side or their payment side, then numbers are going to go up. Their only competition would be probably power.
Okay.
Well, yeah.
So let's see how that plays. On another matter, respect, you attended the National Foods Annual General Meeting as well. Any major highlights that you think you could share with us?
Yeah, so the company reported that performance for the 3 months period to September is firm, taking on from a very positive performance in the past financial year to June 2018. So their milling unit reported firm numbers. Their other operations, snacks,
Yes.
it reported also firm volumes growth. But overall, they did a 26% growth in volumes. So we're seeing maize, flour, and snacks all reporting firm growth. But they hastened to say part of their operations is being affected by the unavailability of forex. For example, they demand about $2 million in terms of their stock feeds operation inputs. So I mean in forex terms.
2 million per month.
So yeah, sure.
Okay.
Whereas in the milling business, where they play a lot in how bread, how bread has not been on the shelves lately, and wheat is one of the major imports for Zimbabwe. So we realized that these guys are the biggest player in that space, constituting about 75% market share. So they chew into much of the forex that's allocated for wheat. So all those shortfalls in forex are likely to keep on dampening or maybe affecting the growth that they may realize. And in terms of maize, we don't know what kind of regime is going to be introduced in terms of how maize is supported, because some of the quasi-fiscal activities that government has been doing, like subsidizing of maize, has also been benefiting them in terms of supply. Okay. So as we move forward, government might shift that model, and we might see government maybe not still willing to pay the 390, or maybe even letting market forces be at play. So all that's gonna impact Nat Foods' maize unit. If supplies go down, it also disrupts the market a bit.
Talking about the influence of government on the operations of Nat Foods, there's also in the matrix the price controls on the bread. Are we likely to see a change in the positive for Nat Foods and the negative for the general populace?
I think they didn't quite highlight the fact that government is controlling bread prices, but indeed, like you have rightly mentioned, there has been overtures by the Grain Millers Association and players in that sector to try to push prices up. But it's not really fair, coming from a background where government is the one which is responsible for procurement of wheat from outside. So it's just like how fuel is sold. Their government is paying for the forex, whereas where you as a local producer, you are only benefiting from government's procurement because you are not really paying US dollars for it. Okay. So it's not fair for you to also increase price. But it's a whole chain of production. Employees need their monies and prices are going up and so forth. So you end up reviewing. So, but I don't see there being a very market manipulation by government to that effect. I mean, one of the ministers came out yesterday and said we're not going to use price controls, but bread is sensitive, and so they've been trying to manage, engage the guys.
But what say you if the government then I think the government needs to then shift their focus probably in command agriculture and try and subsidize more on the mechanization side of things in terms of irrigation. Probably they could find subsidizing on irrigation, so that as Zimbabwe, we're currently going through a drought. and it's not helping much of production. So even if they put a lot of money in the maize category of our agriculture sector, that is not going to really help us. But then if they put more in terms of mechanization or subsidize those who are already mechanized in terms of irrigation, that could be a very big plus. I don't know.
Okay. I think that's an interesting perspective. We would need to talk about the capital expenditure versus the recurrent expenditure when you talk about the budget by the Honourable Minister. But to take you back, I'm aware that INSCO owns a 37% stake, as well Tiger Brand South Africa also owns a 30% stake in Natfoods. Do you think they were impressed by the outlook presented by the CE, Mr. Landsbrook?
Yeah, I think the numbers are positive, and Natfoods is a very strategic business for the overall INSCO group. There are a lot of synergies around the operations. They are mainly into light manufacturing and light food processing, which is obviously under manufacturing as well. But overall, I think these are impressive results. But then the underlying performance, for it to be sustained, there has to be some monetary issues that needs to be sorted out. So I'm seeing a gradual slowdown in terms of their growth rates as we go forward. Okay. But a key unit to note is mainly the stock feeds unit, which is rebounding, coming from 2018 where it was affected by the outbreak in avian flu influenza, and they noted that the unit is beginning to experience a growth, but it's going to take the whole industry time to recapacitate and whatnot. But it's also it's something that's going to be positive, that's going to play out positively on their numbers as we get into full year. So they expect demand to remain firm, but this is obviously subject to other variables which we pegged in terms of money supply, in terms of forex availability, and in terms of how government reacts with regards to subsidization of maize.
Okay.
Yeah.
Now let's talk about the juicy issue. There's been a lot of talk about the annual general meeting that was held by the Mikkels Group.
Yeah, sure.
There's been a lot of noise, and I understand that there was a lot of issues to be discussed. Agnes, you were present. Would you want to fill us in on what really transpired?
The major issue that was between shareholders and directorate was that there was a TB that was given by the government to Mikkels as a means of loan to the government in around about 1998.
Correct.
Where they needed to do some balance of payments thereabout. So at that time, Leo Tsumba then charged a 4.4% interest rate on that TB. Fast forward a few years later, that TB matured to about 43 million, and then and then all of a sudden it's ballooned to about 93 million, and people have been asking how has it gone up there that high, and they figured that during Gideon Gono's tenure as the RBZ governor, he doubled the interest rate to about 8%. And to what reason that was done, there's no clear explanation as to what really transpired there.
Okay.
So beyond that, there were also some issues to do with some corporate governance problems that the shareholders seem to be finding with directorship, where you'd find that there's no MD or solid FD, where there's only the acting FD and the CEO, only other meaningful positions are not filled. So that, and in addition to a little bit of corporate governance in terms of their ownership in Mentor Africa, and how Cape Grace, a hotel that they used to own, which was then swallowed into Mentor Africa, is that how that deal was handled. So the unclarity around those areas were really of a topical discussion at the AGM. So just to add on to that before you take the mic again, you'll see that on the day, Mikkels then dropped about 16.5% in their price.
On the day in question?
Yes, on that day in question. So I think that drop in price could have been very much affected by the shake in confidence within the directorship.
Okay.
We don't know.
But the people that raised up these concerns, were they majority shareholders or minority? I know one of them was Eddie Cross as well as a couple of other figures. Were they majority or the minority shareholders?
Most of them were minority shareholders.
Okay.
There wasn't a vote that was done in terms of whether the board should carry out an extraordinary general meeting.
Okay.
But if that comes into play, they only need about 5% of shareholders to call that out.
Yeah, but if I'm to weigh in, I think this is clearly a corporate governance concern,
Okay.
which has always been raised by the market for over some years now. The way the MiCO's board is composed has been of key interest, and there's been disgruntlement by other minority shareholders, even the mainstream media. Okay. I think it would also come in as a surprise that some journalists who just a few years ago were very critical of how MiCO's is run. Yesterday we saw them playing a very critical role in trying to protect the company in terms of protecting the major player who is walking the way. So okay. you might see also MiCO's playing a hand in trying to manipulate how the media pushes out its information, which is exactly how I also feel MiCO's is run. It's independently run, and there's a lot of manipulation. Because if you're looking at the FD has been acting for more than 2 years now, and you just look at how the board is composed, it's closely guarded within the family. Okay. But this is a public company. There's need for corporate governance observance, and looking at how the long-term debt how debt is structured in the company, you see that it's really a cause for concern when other investments out there are not retaining what they should, and also there are obviously these allegations of manipulation of debt price. So okay. I think this only highlights that there might be things that are not being transparently communicated within the company, but okay. it's all coming from a one-man grip of the company, which the market has always raised. So it doesn't seem to be going away. But when you're looking at performance, I think the company has been solid. Looking at how their operations performed, looking at the retail side, in over 50% growth. And you also look at agri operations, tea and macadamia are doing very good. Okay. The hospitality entity, you're seeing 90% occupancy levels driven by a surge in tourism. Okay. So we're seeing
is that Vic Falls Hotel?
Yeah, this is two of the hotels. Yes, okay. So the agri operations, in terms of their tea and macadamia, they've realized favorable prices. Okay. It might be efficiencies which are coming in, but there's also some firm demand in terms of their product from China, okay. And it's paying out some favorable margins, and they are due to increase their hectarage, which I think you can allude to in terms of how the such macadamia operations are growing big in Chipinge in terms of their competitor as well, which is Aristo, and has been realizing some good numbers from those. So I think their Greek operation is solid, and it's also fits in well given its ability to retain forex. Okay. But when you're looking at the retail side, I think there's need to reconcile what has been happening as a result of a push in prices and what impact it had on the revenue numbers. Okay. But looking at a fair evaluation of the inflation to revenue, you realize that their growth has been quicker than revenue, which is their growth has been quicker than inflation, which is quite fair. So in terms of performance, I think it's coming quite well. There, yeah. Okay. Also, thanks to their Pick and Pay South Africa, which came in handy, refurbished most of it rejuvenated the TM brand, which obviously these guys couldn't do on their own. So I think in terms of performance, they are on a solid footing, but they need to address these concerns in terms so that they regain public confidence, investor confidence as well, and unlock the immense value that they hold.
Okay. I'm also aware that the Mentor Africa was a bit of a hotly debated issue. One shareholder did mention that the Mentor Africa issue was a deal breaker between Kingdom and the MiCO's group. Do you think that we could see an emergency meeting in the weeks or months to come to address that? Because there were also concerns that they wanted Mentor Africa to give back Cape Grace to
deconsolidate.
Yes.
Yeah, that's what Eddie has been asking, but it's now a long time
It's
coming.
now a long time, yes.
When you look at a simple of course, maybe Moxon and his whole coterie of shareholders might have to recuse themselves, but honestly, these guys have not been taking or what these other minority shareholders were talking as a real thing. So I don't see an emergency meeting going on soon.
Okay.
But the fact that he keeps on pushing at each and every AGM, it taints the company. There's need for shareholders to come together, address corporate governance issues, and move on. But clearly, you can see that this kind of fight, it's people who really have.
Has Eddie Cross been objective? Has he?
Yeah.
Could there be subjectivity in what he's said?
I mean, on the onset, you can clearly see that he's trying to attack from a point of knowledge. Of course, these are allegations, but at least he's quite articulate.
Do they hold water?
That's up to them. That's if you really know what's the underlying drivers of whatever is happening. But I believe his concerns has to be addressed.
Okay.
Whether they are not true or not, the company has an obligation to put out the truth to the people.
Okay.
And that's just a corporate governance issue. Once you settle the corporate governance issue, you deal with this effectively. If shareholders are on the same page, then we're okay. I think it's not for us to judge whether Moxon or Eddie is right. But what all this can show us is that there is a corporate governance issue that needs to be addressed. Okay. And they should address it.
Okay. Yes.
Yeah, that's how I look at it.
Yeah.
Okay, interesting. Well, gentlemen, Zimstats just published there's some figures. Would you want to discuss that?
It's a sustained trade deficit for Zimbabwe. What this means is that we are importing far much more than we export.
Okay.
And the margin is now at 2.2 billion, which is a negative 2.2 billion in terms of our gap in the first 10 months of the year. So our imports have surpassed our exports by 2.2 billion so far in the year.
That's a wide margin.
For context, if you look at 2018, we incurred a deficit of 1.8 billion for the whole 12 months.
Okay.
And so at 10 months, we have already exceeded what we did last year. So this shows that we are not being competitive, or we are importing more. So there's been a whole lot of metrics around that, which I think I'll try to look at. But if you have to look at 2009 to 2013, there were some huge deficits. Sitting at an average of about 3 billion a year.
Okay.
And so 2017 was actually an improvement on that deficit position. So this was mainly pushed by the issue to do with protectionism, as well as the issue to do with export growth. So I think those are some of the factors that caused the lower growth. But coming into 2018, demand push. This is where we are at right now.
Interesting perspectives here shared. That's about it for the business of the week. Thank you, gentlemen. Let's take a break.